What is up, everybody, and welcome back to the Everything Crypto Show, where we keep you up to speed on the most important news moving the crypto markets. Now, we are back today with a very important daily market update as Bitcoin is on the verge of a key technical breakout here. We have the San Francisco Federal Bank looking to create their own central bank digital currency as revealed by a job posting. And I do want to talk about some connections here between the upcoming US central bank digital currency, Circle here, who is the native creator of USDC, as well as Quant, who I do believe will play a role in the future of a lot of these central bank digital currencies. And last but not least, we have an exchange token ripping to new all-time highs as they announced that they are launching their very own blockchain, essentially now becoming direct competitors to both BNB and CRO in terms of these centralized exchange tokens, as well as having its very own native blockchain behind it. So new competition on the block, lots to get through in this video, and without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Happy Tuesday, everyone. I hope you all had a fantastic family day and that you were able to spend it with some loved ones. Make sure to hit that sub, like, and notification bell if you have not already, and join the Everything Crypto squad. And with that, we're going to hop right in here with the question of the day. And today I want to know, what is your favorite crypto exchange token? Is it 1 BNB, 2 CRO, or 3 OKX? Let me know in the YouTube comments down below. And with that, we're going to hop right in here with the charts. Now, starting off with Bitcoin, I have been eyeing this very key area of $25,000. We have the 50-week moving average sitting at 24.6K, the 200-week MA sitting at exactly $25,011. This is a very important technical area for Bitcoin to break above, and this is why we have been keeping such a close eye on it here on the channel. You guys can see, as indicated by the 200-week MA heat map, that Bitcoin has historically stayed above this key technical level, and every time Bitcoin is above it, it does tend to come back down and retest it at some point throughout the bear market, which has historically created a very good buying opportunity for Bitcoin investors. However, this was the first bear market in history where Bitcoin actually not only broke below the 200-week MA, but also has spent a sustained period of time below it. And we have discussed on the channel how, just like the 200-week MA acts as a magnet pulling Bitcoin's price down when it is above it, that I did suspect it will also act as a magnet pulling it up while Bitcoin is below it. And we've spent so much time actually focusing on the 200-week MA, which has been validated throughout pretty much this year-to-date rally. You guys can see, taking a look at these candles, that $25,000 has been a very big area of resistance once, twice, 3 times, 4 times, now 5 times here. And if I actually go ahead and take us back up to the weekly, you're going to notice that Bitcoin was actually wicking above this area right here at about 25.3K, but was simply not able to close a weekly candle above it. So the 200-week MA acting as some very heavy resistance here for Bitcoin, as well as the 50-week. And one thing I do actually want to point out here is that while Bitcoin is having a hard time breaking above its 200-week MA, the total crypto market cap here, so the combined market cap of all cryptos, has actually made a move back above its 200-week MA. We have backtested it as support, and it is currently getting rejected at the 50-week moving average. So lots of similarities here between the total crypto market cap, Bitcoin, and Ethereum. We can see here that the total crypto market cap is above the 200-week MA, but just getting rejected at the 50-week MA. Bitcoin is below both the 200 and the 50-week, and then we have Ethereum here, which is also above its 200-week MA, but getting rejected at the 50-week. So if Bitcoin can break above its 200-week at 25,000, I do believe that 30K is back on the table for Bitcoin. And if Bitcoin cannot break above this level and does get rejected, I think we make our way back down to the $20,000 range. This is the 2018 all-time high, a very big area of support, very important for market sentiment, and not to mention the fact that the bull market support band is currently sitting in between $19.5 and $21,000. So lots of technical indicators suggesting that 20,000 would be an area essentially where the bulls do feel comfortable stepping in. Now, as for Ethereum here, just like we mentioned with Bitcoin, if we can actually break above this 50-week, I think that $2,000 is back on the table for Ether. This was the top here that we actually saw for Ethereum pre-merge last year in the bear market. It did also get rejected here at the bull market support band. This was back in August, got rejected here again in September, and then one more time here in October and November. Now, on this year-to-date rally, Ether has finally made its way back above the bull market support band, which is currently ranging in between 1396 and 1493, with the 200-week MA sitting at 1416. So I mean, once again, lots of technical indicators suggesting here that to the downside, Ether would make a retest of its 2018 all-time high at 1,400, just like Bitcoin would potentially revisit that $20,000 level. And then we have the total crypto market cap, Bitcoin as well as Ethereum eyeing a weekly close above the 50-week MA. If they can break above the 50-week moving average, this is when I think the price action could potentially get very, very juicy here. But until then, it is still acting as some form of resistance. Now, we have seen some pretty bullish sentiment in the price action of the crypto market, and not only on the price action side of things, I mean the fundamentals do continue to improve as well. We have the Bitcoin total hash rate here soaring to a new all-time high. This effectively indicates that regardless of what is happening with the price of Bitcoin, that more miners than ever are fighting to validate this piece of the network to get that Bitcoin as a block reward. And you can see here that pretty much ever since this bear market began in November of 2021, that the hash rate has been on a very nice rally to the upside, indicating a lot of maturation in the Bitcoin mining industry, in my opinion, showing that more people are looking to get into this business, seeing it as very lucrative over a longer period of time, which I do tend to agree with. And this is very good on the fundamental side of Bitcoin things, the hash rate hitting a new all-time high. And then as for Ethereum, we have the total supply of Ethereum hitting an all-time low since the merge has gone live. And we're actually now looking at a negative issuance of 30.7 thousand Ethereum. So this means that in the past 158 days, just under 31,000 Ether has been burned. And let's take a look at how this has really accelerated in the past week and month. So in the past day alone, 1,500 Ether has been burned. In the past 7 days, we have seen just over 13.5k Ether burned. And in the past 30 days, 27.8k Ethereum. So majority of this burning has taken place within the past month, really actually ever since this year-to-date rally began. And we can see here that as of January 2nd of 2023, we were sitting at a positive issuance of 5,000 Ethereum. That is now down to 30.6k negative issuance, effectively indicating that since January 2nd, just under 36,000 Ethereum has been burned off here. And this does kind of validate the thesis that we had for Ethereum in terms of the transition to proof of stake and the new tokenomics, essentially being that more buying pressure will lead to more on-chain activity, and more on-chain activity will lead to the Gwei meter flipping above the magic number of 15.5 Gwei, which means that more Ether is being burned than being issued out to the staking validators. And then it's kind of like a snowball effect where Ether flips deflationary, causing more buying pressure, more FOMO, more on-chain activity, the Gwei meter continues to go up, etc., etc. You guys kind of see where I'm going with that. And this is in the middle of a bear market rally in accumulation phase, whatever you want to call it. Gets me excited to think about what this may look like when we are back in a bull run with some more sustained on-chain activity. So that's really it for like the fundamentals of the crypto market. I do think it's important to look at Bitcoin and Ethereum because they do really dictate where the majority of the market moves. And now I do want to get into some specific altcoin news here, starting off with Quant, as San Francisco Federal Bank eyes a CBDC system development. And within 24 hours of the job posting, 45 applicants have shown interest in joining the federal government to build an in-house CBDC. So it says here that the job opening for a senior application developer of digital currency, the candidate is expected to aid the Federal Reserve in designing and implementing systems critical to CBDC research. Revealing its intention, the Fed's post read, given the dollar's important role, Federal Reserve System seeks to further understand the cost and benefits of the potential technologies for central bank digital currencies and how the system better understand this emerging field. Key responsibilities include developing systems related to CBDCs, identifying improvements, and mitigating risk, just to name a few. And yeah, at the time of writing, we can see that 45 applicants had already shown interest in joining here. The software engineer engages directly with management, other developers on the team, development operations teams, and vendors to ensure the Federal Reserve is well positioned to design and implement technology to support a CBDC as may be required by the Board of Governors. So it does look like the US is in fact very keen here on getting their hands on a central bank digital currency. I have been saying for a while now that I do do think centralization is going to be a big theme in the next bull run. Institutional adoption, government adoption, and the overall centralization of digital currencies such as crypto, as well as the central bank digital currencies that I do think are going to really make their way into the broader economy. And honestly, this is something that I have been setting on my portfolio to benefit from, and the main way I've really been doing this is through Quant. So I think that Quant here is easily one of the strongest bets on centralization of the next sort of like bull run. And I do believe that centralization is going to play a massive role in the next bull run. I think it's going to be like one of the key themes of the next bull run, just like the metaverse was in the previous one, as well as AI. I think that centralization here, actual governments, financial institutions adopting crypto, as well as opting to create their very own digital currencies, their very own blockchains, will really just play like a big role in the next sort of bull run that we see. And therefore, I have been trying to figure out which altcoin I think is best set to position from this. And for a while now, I have been talking about Quant, which I think is going to be a major winner of the next bull run. And that does have to do with the technology behind the Quant token, the team behind the Quant network, as well as the actual tokenomics of this project itself. I think that Quant was a big sleeper for a very long time. It is still a sleeper compared to where I think this project could be in the long run. But I mean, given the bull run that we did actually see here for Quant in the middle of a bear market, I think a lot more attention has now been put on this project. And you can kind of see that here based on the price action, that after Quant entered this triple digit range on that run from 45 up to 228, people have really not wanted to let it go back into the double digit territory. In fact, after we pulled back here from 228 all the way down to, let's say, $94, Quant did not even close a daily candle in the double digit range. That dip got eaten up on the same day back above $100, and since then we have spoken about 100, which was a very nice trading opportunity for Quant here, from 100 up to 125. So about a 25% swing trade there in November, and then yet again in late November made for a very nice other swing trade of about 30%. And then entering the new year here, Quant was back at $100, and since then rallied about 62% at the peak of 2023 so far at about 162. Now you guys can see, if I zoom in here, that Quant is currently hugging the bull market support band as a level of support, and if it is able to validate this area and stay above it, I do think that we will see a retest of 150, and getting above 150 means that $200 is back on the table in my opinion. So that is what I'm looking for on Quant when it does actually come to the charts. I'm either looking for a retest of 130 here as support, or rather just a break above 150, in which case I think that we do see that $200 area, especially considering if the rest of the crypto market does remain bullish over the next couple of weeks. And now I do want to talk about some interesting things I am seeing some from the Quant CEO Gilbert Verdian here. For starters, we can see that he reposted a week ago a commercial stablecoin issuance article, part 1, considerations and benefits from the Quant network website itself. And then he also reposted the digital pound consultation paper, as well as posting here today the HM Treasury and the Bank of England released the consultation for a digital pound by 2030. Now, this is important here because if I actually go ahead and go over to the Digital Pound Foundation, I'm going to bring you guys to their website, Digital Pound Foundation. And you guys are going to notice that, yeah, Quant does actually also happen to sort of have their seeds in the Digital Pound Foundation here. In fact, Gilbert Verdian is a member of the board of directors. You guys can see that right here on their website. There he is right there. And yeah, board directors Gilbert Verdian from Quant, as well as Susan Friedman from Ripple and Richard Els from Electroneum. So Ripple also has their ties to the Digital Pound Foundation here. And the other thing I do want to show you guys, if we actually go down to his volunteering experience, is that he worked with the Fed Payments Improvement Committee, as well as the Secure Payments Task Force with the Federal Reserve System. So yes, Gilbert Verdian does in fact have connections not only with the Digital Pound Foundation, but also with the Fed Reserve, and this does lead me to believe that they could potentially play a role in the upcoming central bank digital currency that I do think is going to make its way to the US eventually. And another thing that we have spoken about here is actually the US adopting a current stablecoin as their central bank digital currency in the form of Circle's USDC. I think that USDC is the most likely to get adopted as a CBDC unless the government wants to make their own completely. And what I find very interesting here is they talked about something called cross-chain transfer protocol. So this is a permissionless on-chain utility that can burn native USDC on a source chain and mint native USDC of the same amount on on a destination chain. Effectively, what this does is eliminates the need to use a conventional lock and mint bridge, which otherwise would lock native USDC on the source chain, incurring a potential security risk, and then mint a synthetic or bridged version of USDC on the destination chain. And effectively, Circle is pushing for a burn and mint sort of use case for USDC as opposed to a lock and mint bridge, citing security as a big potential risk. And I do tend to agree with this. I mean, we've seen a lot of hacks occur on these bridges throughout the bear market. So effectively, USDC, or more specifically, Circle is arguing that USDC can be transferred safer from one blockchain to another through burning a native USDC on a source chain and then minting the equivalent amount on a destination chain, as opposed to locking it on a bridge and then minting it on a different blockchain. And how this would work is a three-step process. So number one, burn USDC on the source chain. So a user accesses an app to facilitate a transfer of USDC from one blockchain to another and specifies the recipient wallet address on the destination chain. The app then burns the specified amount of USDC on the source chain. Circle observes and attests to the burn event on the source chain. The app requests the attestation from Circle, which provides authorization to mint the specified amount of USDC on the destination chain. And then the app uses the attestation to trigger the minting of USDC. The specified amount of USDC is minted on the destination chain and sent to the recipient wallet address. Now, this is interesting here because we actually saw Circle talk about this, and what did we find on Quant's website? They talk about here, one way for safer digital asset transfers is to use a burn and mint flow so that only one version of the token exists at any time, identical to what Circle spoke about on their website. The token is burned on the origin chain and then minted on the destination chain. This can work if the bridge owner controls both sets of token contracts on the origin and destination chain. This method is commonly used to transfer assets from permissioned to permissionless blockchain networks. The burn and mint flow does not require the use of an escrow address on the origin chain and therefore removes this honeypot attack problem. So pretty interesting to see both Circle and Quant Network talking about the exact same thing here. And you could say it's a coincidence. I mean, obviously we cannot confirm that anything is in the works, but at the same time, this is a very specific feature that both of them are talking about. At the same time that both of them are looking to play a massive role in the centralization of crypto, more importantly, an upcoming central bank digital currency. And you can see here right on Quant Network's website when they talk about financial institutions, that one of the main things you can actually do with the Quant Overledger is in fact create your very own digital currency. So they talk about the benefits here of an actual digital currency, of using the Quant Overledger to build this digital currency, and they basically claim that they are the solution as they facilitate central bank digital currency issuance and transactions, commercial stablecoin issuance and transactions, as well as tokenized money. And this can be done through the Overledger, the world's first blockchain agnostic API gateway. Overledger integrate their gateway's core API, enabling you to create blockchain applications that will run on any chain faster and cheaper, as well as Overledger Tokenize, where you can create secure digital tokens without writing a single line of code. So once again, I think that there are a lot of building blocks here suggesting that Quant is going to play a massive role in the centralization of crypto in the future, and that's okay because we are here to, pretty much own Quant, try and get here ahead of the big money and try to benefit from that potential price appreciation. Now, I do want to wrap this up here talking about OKB token, which has gained 33% as OKX announces the new OKB chain. So here is OKB currently sitting at $53.12. It is in fact hitting new all-time highs here. I mean, we can see that its previous all-time high was just under $40 back in 2021. OKB has now worked its way up to rank 25 here in the top cryptocurrencies by market cap. And it is worth noting that OKB is the native token of OKX, the second largest exchange in terms of customer assets, with Binance still destroying the competition here with $74.68 billion worth of TVL, but OKX coming in here with $8.41 billion in second place. Now, considering, I mean, it's about 100 million above Bitfinex here, which is coming in with 8.3 billion, and it has over double the assets under management that Crypto.com has here, coming in at 3.75 billion. So yes, OKX is the second largest crypto exchange there in terms of customer assets under management, but that is not what has actually sparked this rally. What sparked the rally here was the founder of OKX, who tweeted that basically a new OKB chain will be launched in Q1, which is independent with the current OKX chain, and they're going to start to build an OKB decentralized ecosystem. So it says here that according to Zoo, he stated that the project would run parallel to the already existing OKX chain. Furthermore, the OKB chain will be developed and managed solely by the OKX company, which is in contrast to the OKX chain, a 100% community-driven project. According to Zoo, more details regarding the network's infrastructure and its consensus algorithm should be expected in the coming weeks, as OKX does plan to launch this project before the end of Q1 2023. So OKX here with over 50 million users worldwide, one of the biggest in terms of customer assets under management. Obviously, the launch of a new blockchain will drive much excitement within the cryptoverse, which could translate into higher adoption of the OKB token. And it wouldn't just be excitement that would drive the price up. There could actually be fundamental reasons to drive up the OKB price if this blockchain is successful, if it does see a lot of use. The first one being right off the bat, if it's a proof of stake blockchain, then people will be incentivized to lock up their OKB in return for some DeFi staking yield. And secondly, if OKB is a popular chain by users and by transactions, then OKB will be potentially used as the gas token for this blockchain, which is what I definitely would assume based on the news here, and that is why we have seen this big increase in the price of OKB. So we are looking at a crypto exchange token that is looking to now be a native blockchain token as well. This sounds very familiar to two other tokens I can think of, the first one here being BNB and the second one being Crocoin. Now BNB is known as the native token of the Binance exchange as well as the native blockchain token for the Binance Smart Chain, while Crocoin is the native token for the crypto exchange Crypto.com as well as the native blockchain token for Cronos. Now Binance Smart Chain here comes in second place in terms of TVL, coming in at 6.6 billion in total value locked, while Cronos here comes in 10th place with 412 million in TVL. The Binance Smart Chain makes up 8.64% of all total value locked on DeFi, while Cronos makes up just over half a percent. So a very big difference here between the two, but it's very interesting to see here that we've seen some other centralized exchange tokens. Now I'm kind of taking the lead of the Binance Smart Chain and the Cronos chain by opting to give their very own token more functionality and more utility effectively by also having its very own blockchain underneath it. And I do plan to keep an eye on the OKB chain as it does launch, kind of see where it does rank on the leaderboard here in terms of TVL, as we do also see Cronos here sitting in 10th place and not very comfortably anymore. I mean, it's sitting here with 412 million in TVL, and then we have Mixin in 11th place catching up with 395 mil in TVL. So Cronos is already at risk of falling out of the top 10 here, and if the OKB chain does launch off here very successfully, that could in fact be what does kick the Cronos chain out of the top 10. Hopefully not. I do hope to see some more TVL make its way back onto the Cronos chain, but we will have to see how that does play out as the OKB chain does aim to launch in Q1 of this year. So without further ado, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Tuesday, and I hope to catch you in the next one. Peace out for now.